US cannot start manufacturing tomorrow even if it wants.
Correct.
Manufacturing takes 2, 3, 4 years. But the way the tariffs have been created now, it creates an artificial trade barrier, and you could end up into a situation where there could be a recession in the US.
Why such heavy tariffs are being imposed?
So I think they want to generate revenue out of tariff. They will generate about $500 billion from tariff, so which is a fairly large sum from their standpoint. And that will help them bring their fiscal deficit down. But it doesn't work as simple as that, because if the whole trade reduces, that the number will also reduce. If somebody says that this is not going to affect us, then I think he is living in a la-la land. Trade affects global economy. The global GDP will come down. We'll have second and third order impacts. We can say that our trade as a percentage of GDP is small, so it will have a lesser impact, but it has an impact. Currency can go into a toss if, say, China were to devalue their currency because of tariff. So there are too many moving parts. This doesn't help any country, will not help US, will not help India. So we will be in a flux. So I think 25 is going to be a very tough year.
Hey guys, I'm happy to be a part of Zerodha's media network. Together, Zerodha and I plan to bring to you simple yet effective and impactful news and views from the best minds in the financial world. Hey guys, welcome to the Money Mindset. Today we are here to talk purely about the events that have unfolded in the last fortnight or so, which is the tariff situation by Donald Trump. Unprecedented, something that perhaps no one expected, the extent to which the US administration has imposed tariffs. And we have someone here who has done a lot of work, a lot of research in this space, and somehow knows a lot. So Sridhar Sivaram of ENAM Holdings is here with us. Sridhar, thank you so much for joining us.
Thanks, Sonia, for inviting me.
I had to get you here because you're always one phone call away for me when I want to understand something, right? So I want to understand the situation we're in currently from your vantage point.
Sure.
What exactly is going on?
Yeah, so I'll try and keep it simple. So first we need to understand where was US before all this tariff came. So their average tariffs of imports into the US was as low as 2.5%. It was very low. Most countries have tariffs in the range of 10-12%. So US literally had no tariffs when people were exporting to the US. But most countries put their own barriers in and around themselves. So China had barriers, India has barriers, US has barriers. So when US wants to export anything, or US company wants to export, they pay tariffs. So there is a trade barrier. So what we call as unfair trade practice, if I were to think from a US standpoint, I'll just give you an example of China. So China has exports to the US, say about 450 billion. And they'd also export to the US through Mexico. So that's, you can add, say, another 200 billion, which goes through Mexico, which is about, say, now 600 billion of exports to the US. Now, what is US known for? Not manufacturing, they're known for services.
Yeah.
So the Google of the world, the Amazon, Facebook, Instagram. China has conveniently blocked the entire services part for the US. So US cannot do any exports to China. This is what I called as unfair trade practice, and this has been going on for ages. Along with that, there are other barriers also China has created. So basically what Trump is trying to say is that I'll have reciprocal tariff, which is whatever you charge me, I will charge you the same. So that's broadly the whole thing about tariff, which seems very fair up to this point.
But why now? All these years, there was, as you called it, unfair trade practice. Everyone's like woken up about tariffs right now. Why is the US administration going so heavy on tariffs right now?
Yeah, so that's the next interesting point, that US has reached sort of a tipping point. So you look at their, total debt to GDP. If you look at that, their total debt is about, say, $36 trillion, and they're adding about $2 trillion every year, because the way the economy has grown post-pandemic, they've been printing a lot of money. The socialism in US had gone up substantially, so their fiscal deficit almost 6-7%. It's expected that this year, if there is a recession, then that number can be closer to 8%. So they're basically at the edge. There's something had to be done. So you have to generate more revenues to bring down your fiscal deficit, also to bring down the borrowings because your borrowings are continuing to go up. So you needed to do something. So this is one of the steps that US was, or Trump always was in favor of tariffs. So if you go back and see what he did in his first term, he did impose tariffs on China. Now he's come back with a vengeance because things post pandemic, things became even worse. Countries have put barriers for other countries, whereas US has been left as it is. So many industries are suffering in the US because of the tariff. So that's why. So it has happened now because they're pushed to the edge.
So you're saying now the US wants to reduce its debt, reduce its fiscal deficit. So they are doing these reciprocal tariffs, and all these years there was unfair trade practices. So in a sense, it's a positive, right, for the US economy. Then why are the markets reacting like this?
So Sonia, up to this, it was great. So if you look at the actual reciprocal numbers for most countries should have been in the 10-12% range. What happened is that Trump and his administration came up with some weird formula based on which they determined that the reciprocal tariff should be XYZ. Like for India, it is some 26%. For China, it's some 34%. Some Vietnam, it is even worse. Those were not based on tariff. Those were based on some other way they calculated the formula based on some trade deficit that they have. That has actually spooked the market because suddenly the tariff numbers have gone through the roof. And as a result, the trade barriers are going to be substantially higher. Keep in mind that US cannot start manufacturing tomorrow even if it wants.
Correct.
Manufacturing takes 2, 3, 4 years. But the way the tariffs have been created now, it creates an artificial trade barrier, and you could end up into a situation where there could be a recession in the US if this is not sorted. Now, from Trump's standpoint, he feels that this is a bargaining tactics. So as you would have seen, they've announced that 50 countries have already reached them. 5 or 6 of them have already announced that they will make their tariff zero. So which is positive up to this. But if they take too much time to negotiate and to work this out, then globally we could see the global GDP come down. Think about any manufacturing company. They don't know what the exact tariff number is. So even if they want to do an expansion today, they will hold back. Production is being cut because they don't know whether this is the right tariff or some negotiations will happen and it will bring the tariffs down. So that's why the markets are in a flux right now. So I would have supported Trump till the first part, which is reciprocal tariff. And if the tariff numbers were based on the actual reciprocal tariff, it would have been 10-12%. Up to this, it was fine. But what we saw post that was complete madness. So it doesn't add up. So that's where my question is.
But is there any explanation to that? That it's not a tariff, kind of like a level playing field at the moment between China and America, right? So in that sense, is there any explanation why such heavy tariffs are being imposed?
So I think they want to generate revenue out of tariff. That's the only explanation that I can think of. That they think that if they put high tariffs like this, they will generate about $500 billion from tariff, so which is a fairly large sum from their standpoint, and that will help them bring their fiscal deficit down, bring some of their borrowings down. But it doesn't work as simple as that, because if the whole trade reduces, that the number will also reduce. So I think up to this, as I said, if they had just stuck to their reciprocal tariff actual number, it would have looked fair, and like somebody like me actually was supporting reciprocal tariff. But now it has reached a stage where it seems that
it's like madness.
Yeah, it may be a self-goal if this continues. My hope is that in the next 3 months, we will see a lot of bilateral trade deals. Like I know India has already submitted their offer, which is a bilateral trade deal where they're willing to reduce the tariff. Just keep in mind that India has almost 70-80% tariff on, say, a Harley Davidson, which Trump always talks about. You have almost 150% tariff on liquor and wines. So I don't know which industry we are trying to protect. We're such a small industry. It doesn't matter if there are premium whiskeys come into the country, but what it may be, we have protected these industries. We have similar high tariffs on, say, high-end pharma. So which is why they keep talking about high tariffs that India charges on pharma, so we will charge high tariff on the generic exports, which is not comparable at all. I think a lot of these are solvable problems from an India standpoint, that these you can easily make them zero, and your reciprocal tariff will become zero for all these industries, and you can pick and choose what you want to protect. Like maybe for India, agriculture is a touchy subject, so maybe you protect the agricultural part of it, which I think most countries understand that it is something which most politicians want to protect. We see that in Europe also. We are seeing that in US also. Like he keeps talking about Canada imposing high tariffs on agri exports. That's because every country tries to protect the agriculture.
But I want to understand this a little more, right? America for the longest time has been known as this free trade economy, and now there are talks of protectionism and isolationist moves, right? Nationalistic moves, if you may. What does this mean? There's so much narrative of de-dollarization. We have spoken about it for so long.
Much.
What does this mean for an average investor sitting in India?
Yeah, so first of all, if somebody says that this is not going to affect us, then I think he is living in a la-la land. Trade affects global economy. The global GDP will come down. We'll have second and third order impacts. We can say that our trade as a percentage of GDP is small, so it will have a lesser impact, but it has an impact. We are capital starved, so if globally we get into a risk-off mode, then we get lesser FDI. FI is anyway selling, so that is another challenge. A currency can go into a toss if, say, China were to devalue their currency because of tariffs. So there are too many moving parts. This doesn't help any country, will not help US, will not help India. So we will be in a flux. So I think 25 is going to be a very tough year. I mean, we may have already had a tough 3 months, but next 3 months could also be tough till the time this whole trade issue is not properly resolved. So I think every investor has to keep that in mind, that this has a significant impact.
I remember a year ago you had told me that, Sonia, gold is really the place to be, and gold, not a year, maybe 2 years now, you've been a big proponent of gold.
I've been a bull for the last 7-8 years. I first started investing in gold in 2013. And then post-pandemic, I was very bullish, and I used to push all your ex-colleagues also to invest. It was tough convincing some of them, but whoever invested now thanked me. But as I said, it was an asset allocation call more than anything else.
So I want to talk about that, because gold was a great call, Sridhar, I must say that. And I benefited from it a lot. But what next? If you had to give us the asset allocation call for 2025, 2026, and a lot of people here are young investors, right? What would your asset allocation strategy be?
So before that, I want to just complete on tariffs. I want to explain that, the general feel is like if there is a 24-25% tariff, that entire thing goes to the consumer in the US and he'll not be able to pay. The maths doesn't work that way. So the tariff is on the price at which it lands in the port. Typically from port to, say, a shirt comes into a port and then it goes to Walmart. So if the import price is $10, by the time it reaches the Walmart store, it is at least 3 to 5 times the price. So it goes to, say, it's on an average take 4 times. So the shirt is getting sold at $40. It was imported at $10. The tariff is on $10. So suppose there is a say 25% tariff at $10. So it's about $2.50 is the increase in price. It's not on the $40. So you have to keep in mind that it is not as dramatic as it is being made out. Out of that $2.50, a large part will be borne by the consumer. Say, $1.50 the consumer bears, maybe 75 cents the retailer bears. A very small portion will be borne by the exporter. He will also have to bear, but it's a very small portion. So the point I'm trying to make is that when you see a tariff number, it is not that a shirt is getting sold at $40. You have to multiply that by 25% to arrive at the number. The number of actual tariff is much smaller. So people don't get the concept that the tariff is on the price at which lands on the port.
But I guess what people are worried about is that at a time when already the US economy was heading towards a recession, jobs are an issue, inflation is rising. This is like a double whammy, right?
Yeah. So I think I've heard a lot of experts talking about this issue, but I haven't heard anybody giving a solution. Everybody has unanimously said that, the debt situation of US is unsustainable, the fiscal deficit situation is unsustainable, you cannot keep printing money. What's the solution? That solution is an answer that I haven't heard from anybody. This Trump government thinks that this is a solution, which is bringing back manufacturing into the country, which may be very tough. Tariffs will give them some money. Maybe that's the solution. That's how they are thinking about it. But I'm yet to hear the other side that, okay, if this is not the solution, what is the solution? And that's still a question mark, because they've reached a situation, as I said before, that the debt to GDP, their fiscal deficit, the numbers are, unsustainable. So they need to do something.
So there's one more narrative, right? That if the US goes forward with these policies, then there are new allies that will be formed. Manufacturing will of course, manufacturing services, the entire construct will sort of move eastwards and the world order will change.
Yeah.
Is that too far-fetched a theory?
I think it is far-fetched. It takes a long time for world order to change. So if world order were to change today, you need an alternative. So what is the alternative? Apart from China, I can't think of any other alternative, because Europe as a basket doesn't look like it can hold the mantle of a reserve currency. And I don't think at this stage, there are enough countries who want to believe that China is the option for the reserve currency. So I don't think this happens in the near future, not in our lifetime, I think. That this is a debate which will keep happening. But I think
we've seen too much in our lifetime. We don't need more
exactly.
upheavals to take place,
we are
right?
happy with this. So as you asked me about asset allocation. So I think that's something that, I keep telling every youngster that I meet that, this is something very basic and it has to be done. The rough maths for asset allocation is that 100 minus your age is the equity component that you can have. So when you are younger, you have a larger component. So if you're 30, 100 minus 30, 70% of your financial savings can be in equity. It's a question of how much risk you're willing to take. So that's like the upper limit. So you can have it lower, but that's like the upper. And as you become older, your equity component comes down, because suppose you're retiring, you want more fixed income than equity, because you don't want volatility in the market. But that's the rough math. But if you understand equity well, if you're in the markets like you or me, then obviously we will have higher portion in the equity.
And but you can also stomach a higher loss, right?
Exactly. So this is the basic maths that you need to have asset allocation, and within that you have debt. You have, gold or silver, which a lot of people have missed, and they just feel that this is an asset class not worth investing. And I've argued many times that if you look at the 20-year or the 10-year returns of gold, the Indian gold, I'm saying the INR gold, they have matched the Sensex returns. So there's no reason why you should not be investing in that asset class. Obviously, it has its own volatility. Some years they do very well. Like if you see from January or February of last year to now, gold is up 50%. Obviously, you can't expect gold to be up 50% again for the next year. So it will have its own phase of consolidation. But
has gold peaked, you think?
I think from here on, gold will give us returns based on what happens to INR. See, there is no peak. Like, will you say that equity has peaked? No. It's like that, because it's a store of value. And now what has happened is, if you look at the total gold consumption in the world, about 25% is being consumed by the central bankers.
Correct.
So about 1,000 tons is bought by central bankers across the world. And I think this will only accelerate with all this tariff nonsense that we are seeing right now, that more and more central bankers will want to keep their surplus in other forms other than US Treasury. So you will see demand for gold continuing. Obviously, when any asset class goes up very sharply, you will see some consolidation, some correction. That's par for the course. But if you ask me over the next 3 years, 5 years, I think it will continue to do well. It'll be very difficult for it to repeat a 50% return. But if your return expectations in INR are closer to say 10 to 13% or 10 to 15%, in that range it should give over a period. That's my broad view. I could be wrong. But over the years, it has worked well for me and worked well for all other gold investors.
I remember you trying to convince all of us, for years now, and now it's like reached a stage, it's become very mainstream, and
Yeah.
everyone's perhaps missed the bus, at least for a larger chunk of the rally. But at least what's worked for me, I've seen like 2-3 bear markets now, is in every bear market I try to top up whenever the market falls 15-20%, and then of course it falls further, but then you can never catch the bottom. But what's your approach whenever there's because you manage money, you manage, you are at ENAM Holdings as well, managing large money. How do you approach bear markets?
I think very similar to what you have said, that if we've managed to create some liquidity before the market corrects, then obviously you use that to deploy more into the market. If not, then just switch within the asset allocation. So there isn't much. As I said, there is a formula to invest in equities as to what percentage you want. I may have much larger than that because I'm hardcore into the market. But even then, I have fairly large portion in gold and in debt. So I will always keep my asset allocation intact.
So tell us a little bit about your own investments. I mean, you told us about large asset allocation, but in terms of, say, other asset classes like property or, anything else, I don't know.
So I'm not into any other asset classes. So I have tax-free bonds. So I was a big proponent of tax-free bonds. In 2014, the government stopped issuing those. Those were great, asset classes to invest because you're getting 7-8% tax-free returns for 20 years. So whatever bonds came, I just subscribed to all of them. SGB again was again tax-free. That's why I was begging people to invest, because when my view is when the government gives you something, you should never refuse. You should take as much as you can. But I would have 10% in gold and say 20% in debt and all the tax-free bonds and 70% in equity.
That's for someone who's a big proponent of gold, your gold percentage in your portfolio is very low, I must say.
Yeah, so my asset allocation mantra was 10% gold.
That's it.
Yeah, so that's how.
However bullish you are on the asset class.
Because it's as somebody who's investing in the markets, I would want to believe that if my view on gold is that it'll give me 10 to 12% return, and not everything is tax-free, right? There, so if I'm investing in gold, it is taxable 12%, versus an equity where I think that I can generate, say, 17-18%. So, which is why the asset allocation is low. For somebody who's not in the equity market, you can have higher, but people don't even have 10%.
Yeah.
So I think there's a long way to go for people to reach 10%. I've used that benchmark, to have 10 on this, 20 in debt, and then the rest in equity. That's how it has worked for me, and I haven't really changed. Obviously, because of market movements, these things move a little bit here and there. But I would say broadly, that's how it is.
So when you talk about this tariff situation, right, coming back to the main topic, a lot of times during bear markets, there's a reason for a bear market, right? It was the Lehman crisis, then there was COVID, now is the tariff situation. A lot of people lose their minds over it, right? Because you hear these doomsday situations. How do you see this play out? Do you think it could be a long drawn issue, or do you think it could be like a sharp V-shaped recovery based on all the information that you have?
Yeah. So I think this could be a slightly more long drawn than what we've seen in the past. See, last 5-6 years, or if I take last 10 years, every correction has been very short-lived, and we've seen a recovery very fast. And investors in the market haven't seen a bear market for a period at all. So I started in 94, and 94 to 2003, the market gave no returns. Almost a 10-year bear market till in between we had the tech boom bust, which happened in 1 year. So I'm grounded from my baptism was in a bear market. So I always want to ensure that you protect your capital. So very cautious while you're investing. The newer and the younger investors haven't seen such cycles at all. Can it come back? It can, but I don't think it'll be 10 years because these days the cycles are much shorter. I mean, if there is a issue, then the prices get corrected in like 2-3 days or maybe in a week's time or a month's time, and you move on. I think the same will happen to the tariffs. US will realize that it's not sustainable for them to fight with every country because as they see the stores dry up and there aren't enough goods in the store, something has to be done. So you could see people protesting in the US. So,
but don't you think they've thought this through already, or do you think it's just like economic brinkmanship, like an
I'm
ego
not
war, so
sure.
to speak?
Yeah, I'm not sure if they've thought through everything. Because as I said, if they had thought through this and if the tariffs were only 10-12% as it should have been, markets would have taken this in their strides and countries would have moved on and would have still negotiated, but it would have been a far more easier path. I'm not sure what the end game here is, and the end game could be, maybe slightly chaotic, to put it mildly, and which is why I think the next 2-3 months are going to be very critical. We'll see this flip flop. The markets go up 4-5%, comes down. It can be difficult for people who are not used to it, especially the younger generation who've started investing in the last 5-6 years and haven't seen a bear market at all.
It's quite painful.
Yeah,
especially
it's
when
quite
your capital
painful.
is small, right?
Exactly.
And when you start off
And
with
also
minimum.
they've assumed that there's a right to win in equity,
Yeah.
which is that can only go one way. It's not the case. So a lot of them are realizing the hard way that this is a volatile asset class and you have to have proper asset allocation. So they're learning it the hard way, which is good. I mean, when you're young, you can stomach some loss and learn so that you won't make the mistake next time around.
So, one thing before I wrap up is that you have mastered this art of picking themes which have worked really well. Gold is one. I remember PSU banks was the space which you really, identified. You went negative on IT stocks when this whole AI boom began. So tell us, what is your view now? What are a couple of big themes that you see over the next 2 to 3 years?
Yeah, so I think power equipment is something that I see as a big opportunity because power as a global theme is playing out today. Thanks to AI, you need data center. US hasn't invested in the power sector at all. You're seeing nuclear plants coming back. Europe is putting back thermal plants again because they are short of power. Same in India, that we will literally double our thermal capacity in next 3 to 5 years. We're going to add almost 150 gigawatts of thermal also in the next 3-4 years. All this needs evacuation. All this has to be distributed to various parts of the country. So I think the power equipment theme looks very exciting, but some of these stocks have rallied. So one has to be very careful in what you are buying. Some of them have also corrected during this correction. So that's like a theme which looks quite interesting. That's
what your focus is on right now.
Yeah, I would say manufacturing looks interesting. So there are various pieces. Some pharma also looks interesting, like CDMO, something which we are quite bullish on. So there's a big patent cliff coming up for CDMO players. So that could play out in 27, 28 and beyond, especially the GLP-1s. And there are many companies who benefit from that. So that is the other interesting thing. But I can't find deep value these days.
Yeah, I mean, it's hard.
It's very difficult. Despite the correction, it's very difficult to find. I mean, when we invested in PSUs, I mean, they were such deep value that you couldn't have gone wrong. You couldn't have gone wrong. I remember doing a show in March of 21, and I know so many people called me saying, "Oh, this is value trap. This will never work."
Yeah.
Neither did we know that. So neither did we know that it will work so well. But we knew that the risk reward was in your favor. But it's very difficult to find such themes now. See, the risk taking ability for us is far higher. So when we invested in PSUs, it didn't mean that there were no risk to it. But when you're buying PSU banks at 0.3 book, very difficult to lose money from there.
Absolutely.
Fortunately, things played out well for us.
And in this whole AI theme, I'm asking you because you were telling me in the break that your son is a big techie.
Yes.
And he does a lot of work in this space, and AI is sort of taking over everyone's lives. What are the changes going to be? And from an investor or even like a job seeker, your young person point of view, how should you be prepared?
Yeah, so I think the Indian IT sector is in trouble. This was my view 1.5 years, 2 years back. I've discussed this with some of the senior IT, veterans of India, and one of the view I got, I will not name him, is that it is both a disruption and an opportunity, but the disruption will come first. So what is happening in the IT space thanks to AI is that what used to be done by 10 people or 12 people, especially on the lower end work, which is the data analytics and data mining stuff, that thanks to AI, one person can do in less than half a day. So I think that's where the disruption, which is why you're seeing that IT companies are not hiring people, because obviously their productivity is going up. If you're not hiring and you're still getting same revenue or even more, your productivity is going up. But their clients also know that you're using AI. So which is why you're not seeing margins going up, because the clients are also squeezing them that if you're using AI, you're not going to get the same dollar per hour rate as you were doing earlier. So I think Indian IT sector has missed the big AI buzz. Look at what happened to DeepSeek. And the amount of money that was spent to create that. My view was that if the Indian IT sector, the money that they spend on buyback, if they had just put that in, innovative stuff, they could have created a DeepSeek. But they were so focused on quarter and this whole thing about giving guidance for the next quarter. Unless you disrupt yourself, you are going to get disrupted. And that's what is happening, that they were so focused on the short term that they missed the bus, is my sad view. And this has multiple effects, which is, the second order impact of, IT sector is fairly significant. I think the only silver line that I see for the IT sector is coming from GCC, which is the global centers that are being opened. So a lot of the jobs are going there. So when you speak to, say, the real estate professionals who work with the MNCs, they say that multiple companies wanting to set up shop.
Correct.
We know about the JP Morgans, the Morgan Stanleys of the world, Citi. All of them have large GCC office in India. Amazon has a big setup in Hyderabad, but multiple smaller companies are also setting up. It's not just tech. It's finance, it's going beyond that, legal. So I think the big silver lining for India is on the services side. IT sector will lose because of AI, but that AI will help more GCCs to come in. So that's the silver lining. So maybe the listed companies will lose, but as an overall economy, if we play our cards well, especially on the GCC, and we allow the ease of doing business continues, then that is a silver lining I see from the AI and the benefit of AI to the Indian economy.
Wow. What stayed with me is you said, what? If you don't disrupt yourself, you
then
will get disrupted.
Which is happening right now.
It happens everywhere, right? In every industry.
It happens in every industry. It happens in every, and especially the incumbents lose out because they don't disrupt themselves.
You're not agile enough to adapt to the
because you're focused on the profits that you're already getting, no?
Yeah.
So you don't want to lose that profit.
Absolutely. Wow. That's a big life lesson for me, actually. But before we end, a lot of people know and a lot of people don't know that you are also a wildlife enthusiast.
Yes, very much.
And we all see your fabulous pictures on social media about, your trips to the jungle. Tell me, where are you going next and which has been your best safari yet?
Yeah. So I'm going to Jim Corbett National Park now. And after that, I'm going to a lesser known place called Dudhwa in Uttar Pradesh. A very beautiful terai jungle, very similar to Jim Corbett. And Dudhwa is one of the places where you have, the big fires, they say. You get the rhinoceros, the elephants, the tiger, the leopard, the bears, almost all of them in one place. The only other place where you get a lot of these is Kaziranga.
Okay.
So that's one of the destinations that I'm going because there's a long weekend right now.
I have only been to Tadoba, I must mention, but I've also been to the Kruger National Park.
Yes.
So those are the two safaris I've done.
So jungle and nature is something that calls me regularly, and whenever I get the call, I'll end up going there. It also is a good way of rejuvenating yourself, given the stressful life that we deal. So you need to calm yourself. So everybody has different calling. Some people find sports, some people have music. I find jungle travel and nature as the calling, which helps me to calm and think
Clearly.
clear. Yeah.
But what is it about the jungle? Like, what is it that really gives you that rush?
Yeah, so I think one is that they're so beautiful. The other thing is it teaches you patience, something that we require in our markets. So people see my photograph or a video and they say, oh, you went into the jungle and you saw so many tigers. It's not they are waiting for me. There's a lot of process to it. You see pug marks, you see here calling, then you wait at some place, then you need patience to wait there because the tiger's not waiting to come out to see you. So it's a game of patience and it's a game of being attentive and looking
being
for
in the moment.
Yeah, and so that's what I would say, that our market's also like that, right? You need a lot of patience to make returns in the market. So sometimes, in fact, I often say that there's so much similarity between wildlife, nature, and so much to learn from the nature in the investing world.
Really? Wow, that's interesting. So tell me, which has been your best safari yet?
So my favorite is Corbett, which is where I'm going right now. There's a place called Dhikala in Corbett, which is about 40-50 kilometers inside. In fact, Modi ji did his Bear Grylls, he did a Bear Grylls show. Oh. He shot in Dhikala actually. Oh. I would say possibly the most beautiful jungle in India, but there are no 5-star hotels there. You have to stay in one of the government guest houses there. And I can tell you that getting the booking for the government guest house is more difficult than Coldplay tickets.
Really?
Yeah, it's so difficult. So it gets sold out in 2 minutes as soon as it opens every Sunday. Or you need to have contacts like Modi ji, which I don't have. You may have.
I have you. You are my contact. Next time I want to go to Dhikala.
So that's my favorite place. I at least try to go there twice a year. It's got a river. It has mountains. And it's very beautiful, one of the most picturesque, and not too many people land up there because getting there is so difficult.
And any other safaris where it's easier to get access, easier to get a room?
Yeah, so I would then say Kanha is very beautiful. That's the other jungle which has sal trees. So sal trees are very tall trees. So any jungle which has a lot of sal trees gives you the beauty. Dudhwa is the other place where I'm going in UP, is very beautiful, not well known. But one of the very beautiful parks. As long as you're not obsessed with tigers, you're happy to explore the jungle. These are the two I would
say. So, when I went to Tadoba, I had a very interesting experience. So, the first 2 days, we were there for like 3 days. The first day was all about chasing, like you said, all about chasing the tiger, right? Spotting the tiger. And it was just like, okay, the tiger's here, let's go straight there, the tiger's here. By the second and third day, it stopped becoming about that final destination. It just became about the drive, about how you just have access to the jungle. You're quiet. There are no phones. It's a complete digital detox. So that was what worked for me.
In the jungle, if you remove your focus from the tiger, then there's so much more to see. Yeah. There are so many birds. There's so much activity there. So you need to go with a good naturalist. So when you're going next, you let me know.
Yeah,
I will arrange a good naturalist for you, or you come with me. So that invitation is there. So that helps because I see a lot of people obsessed with tiger.
How many spottings and leopard spottings.
So then you lose the charm of the jungle. Of course, every time I see a tiger, the adrenaline rush is there. I mean, I can't say that I don't want to see the tiger. But there's more to the jungle than just the tiger. That's how.
And apart from India, any other?
So I've been to most parks in the world. So Masai Mara is the other favorite of mine, and the one of the events that you should visit Masai Mara is for the migration, which happens between end August and September,
Yeah.
where all the wildebeest are crossing the Mara River and there is full chaos happening like our markets in the river, where crocodiles are trying to catch the wildebeest, and as the wildebeest comes out, you have lions waiting for them. That's a sight, and just the sheer number, it's quite a sight. I'm going there in August.
Okay.
So I have not taken my wife for migration for all these years. I've done it a few times. So the previous occasions she was not free. So this year I'm taking her.
Oh wow, lovely. That sounds like a great plan, and hopefully I will take some tips from
Sure,
you
of
and
course.
plan for my family as well. But Sridhar, it was great speaking to you. Thank you so much for joining
Thanks
us.
for inviting me, Sonia.
And of course, we'll talk a lot more. So our show is called Money Mindset. So we always wrap up the show by asking the guest about their view on money, what money means to them, and how has your relationship with money changed over the years?
See, money is important, right? But after a point, the zeros start making lesser relevance. So maybe at this stage in my life, so I want to ensure that I enjoy my life. So the last 10 years, I've sort of ensured that I have a work-life balance. And at the same time, I'm not, completely ignoring my work. I ensure that, I'm on top of it. But I don't need to chase money, right? So may not be for everybody, but I'm just giving you my view on it. So that's how I see. I mean, there's only that much money you need. So
the zeros stop making
sense, yeah.
because you have so many of them.
Because after a point, you can't spend it, right?
Yeah.
How much can you spend? So I think it's a question of what you think is. Every person will have a different, number in their mind. So if you think you've reached that number, then you need to think that you're better off spending that money than just accumulating it, right? So I spend it on my travel.
Amazing. On that note, thank you so much for joining us. It was a pleasure having you on the show.
Yeah, thank you for inviting me.